Hello, everybody. I wanted to do an update just to check in on a previous campaign that we had started earlier in the year for Amazon. Back in February, I believe it was the 14th or 15th, Amazon had its release of earnings. So here we are. Today is Friday, April 24. It is after hours at this point. I've already made my trades for the day, and we are getting ready to go into the weekend next week on the 29th. So here we are, we're looking at Amazon, and one of the great features of Schwab is that they provide this research page. So one of the things they provide here is this earnings date. So you can see that right there. This is the uh, April 29 earnings day coming out. It's going to be after market close. So we got into a position earlier in the year. I believe it was about the 17th of February. So here was the chart that we're looking at. So if I go back to the 17th, it looks like earnings was here, I believe, on the 13th. And then we got into position after we saw the market turn around a little bit and we had a little green day. So we moved into a position on the 17th. Since then, we've had a pretty good move up. So this is kind of what we expected. I think the earnings ended up coming in pretty well, though the market didn't take it that way. So if you look down at this stochastics, this is one of the indicators that I use. And we were really in this oversold region. So today we're in this overbought area. Obviously, just technicals alone doesn't really tell you much, but when you think about it in the whole narrative, so that put us up to this 263. I'm actually going to go ahead and link the video that I made back in February of us getting into that position. I'm not going to completely explain the ins and outs of it, but the summed up brief version of that is we went ahead and we sold a put back here for a strike of 205. That strike 205 put, as well as using the premium we received from that to buy a call at 215. If I remember, I use this tool. For those of you who've been around, you'll see me use this tool just to kind of track individual campaign. So since then, I've actually had about 13 transactions. So it's been pretty busy over that period of time. So I got into this number one trade, which was this call here, and this number two trade, which is the put. So I made 2,655 in premium. I ended up buying that back on the 22nd. So that was 2 days ago. I ended up buying that back for $9.62. Obviously, options are in hundreds, so that's $962. So for that leg of the transaction, I made a little over 1,600, $1,700. And I used that premium to buy into this call here, you can see. So I purchased this call for 25.14, so $2,514. Since then, as the price has appreciated, it has gotten up to a value of 65.80, so $6,500. So I have an unrealized gain so far in here of about $4,000. I closed this put out, so I have a realized gain of 1,600. Now, in the meantime, I had been selling calls on top of that long position just to collect a little bit of premium. So I sold this one at 42. I let it expire. I sold this one at 11. That one, for some reason, it says this really should be. Oh no, I bought that one at 11 to give myself a little cover. Sorry about that. And so I bought these two together. So that's the same date here. And then again, I just kind of moved on. I marked them closed as I closed those legs out. And then I look at the gain and loss overall. So as we got into this position here in early April, the price just started going north, and I wanted to try to capture as much profit as possible on the call side. So I would buy back a short position. I would take a little bit of a a little bit of a hit on that, but I would roll that into another short position and I would cover that loss. So this is why I end up with this strike here. So I'm short um at 245, I think, as of right now. Well, let's just check. As of right now, we're at a 264. So we've exceeded greatly that number. And so with earnings coming up, one of the things that happens is volatility goes up. I'm currently kind of short on market value here. So as the volatility crushes and if prices go down, which I suspect after earnings we should see some settling, but I really would be happy either way. Um, we will be able to either monetize or take some profit off of this short position, or we'll just end up rolling it further out. So one of the things you'll notice is the respective expiration dates between these two legs. So the short position I have for a July 17 expiration, and the long position I have a January 27 expiration. So I kind of track it this way. This some of this is realized and some of this is unrealized. So I'm at about, let's call it $3,300 or $3,400, depending on exactly how we count it. I like to use this OptionStrat tool, so it kind of explains it a little bit better. It's probably a little bit easier. I'll actually put a link to OptionStrat that I'm an affiliate for them. So if you use it, I'll make like $4 or something. But so this was this short put position. I opened it at 26, and because I sold it, that's money that I received as premium. I ended up closing it for $9.62. So that means I paid out $962. So that ends up with $1,694 of profit that I've realized. Then there was this long position, this long call position. So I bought a call, right? Because I was essentially speculating that the price of Amazon was going to go up before January of 28. I ended up spending $2,500 there. So between this $2,600 and the $2,500, I make a couple of bucks on the difference, but I'm able to take that long position. The price has gone up, and then over time, I sold various short positions that were above that strike price. It slowly walked it up. I walk it up in strike. I walk it out in time. And really, so that ends up right here, which is where we're at as far as gain. So right now, according to the positions and timing of it, we've got about a $3,300 unrealized gain here. And we're getting close to what looks like our optimum, like the most possible profit we can make, which is somewhere in the $4,000. This is by July. So if the price comes down a little bit and I end up rolling this thing out to December or even to January, I should be able to extend that a little bit. So, anyways, I just wanted to check in. I guess one more caveat is with some of that premium, I had been collecting these long positions. So at this point, I've collected 6 shares, or collected. I mean, I bought 6 shares. Cost basis overall is 244 so far. So as the price goes up, I should get some appreciation there. Obviously, if the price goes down, I can continue to hold onto those shares. And as the time goes on, we're gonna eat a little bit of that theta here. So option strats essentially telling me I've got a 99% chance of making a profit on this thing. This you see in this background, there's this slope of probability. It's one of the great things about this tool in particular. But I really just wanted to get this video out. Again, I'll link the other video in the description here. But I just wanted to get it out before earnings because if you don't have to hold these puts past earnings, I would recommend that. This isn't financial advice. This is just me giving my opinion about things that I do, and if anybody gets some coaching value out of it, you know, that's great for them. So I just like to put this out there for the community. All right, everybody. I hope you have a great weekend. do something that scares you a little bit, and have a good day.